Are you personally a buyer at these levels?
Well, let's see. When we went public, you'll recall that we priced the stock, I think, at 42. And then for some reason, the retail markets ran it up to an astronomical number. And I think it was good that, some of the air came out of that. But if you look at the big picture here, I mean, top line revenue growth, 41%. We beat analyst expectations on virtually every metric, revenue growth, cash, earnings. I think the customer growth grew by order of 40%.
Hi, and welcome to Market Conversations. Just want to do a quick video on AI, C3.AI. This stock has been on a downtrend ever since it went IPO. But before I get started, just want to let you know that I am not a financial advisor. This is just for entertainment purposes only. I also have a Discord Patreon that I'm trying to grow. So if you guys are interested in sharing ideas and getting some of my alerts, definitely come check it out. I am going to start a challenge next year, and hopefully we can all make money next year, because this year has been a very terrible year. I know for myself and some other people as well. So come check it out. This stock was up 0.86%. If we take a look at let's go back. 1 year ago, the stock went to a high of 180. This is what happens when companies go IPO. People push the price up, and then it comes back down to where it's supposed to be at. We have seen this with this stock. We have seen this with coin when it went to 400. We also saw this with Hood. But Hood is a different story. So the stock went to a low of 27.52. This was about a couple of weeks ago. If we take a look at some news here, just last week, Morgan Stanley maintains underweight on C3.AI, lowers price target to $31. For a stock like this is a long-term investment. I would be very cautious about playing short-term calls, short-term puts, because if the stock doesn't move, those options will lose value very quickly. Even leap calls, I'm scared of, especially for a newly company like AI. So then we have another good news. We have some good news here. On December 15th, the company reported $100 million buyback. So that's good news there. And then we also have some news here. It says why Sean Udo is eyeing C3.AI stock. It says according to Udo, the company is growing revenues at a 30% to 35% rates. What has Udo excited about the company is that it was the recipient of a $500 million contract from the Department of Defense. The contract will augment the current growth rates and has the potential to double it. In addition, Udo has experience in the past when a company lands a government contract, it sometimes can lead to more contracts from other branches of the government. Finally, the company believes its own stock is cheap as it initiated a $100 million share buyback. We are at a very strong support right now. It has been just in this range of $30 and $35. If you are thinking about getting in, what you can consider is selling cash secure puts, receive the premium, and possibly get the stock at a lower price. So right now, these 30 strike puts are going for $2. So you will be able to receive $200 if you sell a 30 strike put. Best thing to do with these stocks is to buy shares and hold. Let me know what you think of this company. Are you buying the dips on this? I myself got in here at $60. You can see this line that I drew, this trend line. And unfortunately, ever since then, it started to downtrend. But thank goodness I have shares and I can hold them as long as possible. And hopefully 5 to 10 years, it'll go back to above 100. But that's just the risk with IPOs. We don't know how well a company is going to do. your thoughts, comments, and definitely come check out the Patreon Discord. Hope to see you there.
It was a great quarter. We exceeded expectations on every basis. And, sometimes the markets are a little bit brutal. It's the way the market is. We are I think, the world's largest provider of enterprise software applications. I think most of the analyst estimates have us growing this year at 35 to 36% compound annual growth rate. That means we're going to double in size every 2 years. So our growth rate is in the top decile of rapidly growing software companies. So I think the story is we have $1 billion cash in the bank. We're the world's leading provider of enterprise AI applications. I think everything's going to be fine.
So everything's going to be fine. You sound optimistic. As you mentioned, you did price the IPO in the 40s. You're now at about $28 a share. Are you personally a buyer? Is this an opportunity?
I don't make recommendations on
yourself.
on the stock, and I have, as you know, I have a inordinately large position in concentration in this company. I think it would be, I'm not certain it would be rational for me to increase my concentration in one company.
Tom, beating a raise. Who knows exactly what's moving the market, especially when it comes to growth stocks these days. But at the top of the call, you did mention your selling model and how you have adjusted that and you're adjusting it back. The one number where you did miss, I believe, was on subscription revenue. Give us some perspective on exactly what happened there, what you're adjusting back to, and perhaps the results you've seen so far, if you have seen results.
Well, subscription revenue grew 32% year over year. So that again would be in the top decile of the software universe. And I think our services revenue has varied in any given quarter between about 14 to 19% over the last 4, 5, 6 quarters. And it was at the higher range this quarter, but it kind of varies. But 35% growth. Understand the company grew last year, the year before we went public. It grew at a 17% compound annual growth rate. It's currently growing at, this quarter it grew at, license revenue grew at 35. Overall revenue grew at, 32%. Overall revenue grew at 41. We're looking at almost 35% top line growth this year. This is a strong growth story, and we're addressing a large addressable market. The goal here is to become the world's leading provider of enterprise AI applications, and I think we're on track to achieve that goal.